Hi traders, this is the tutorial for the Pro Traders Workshop. So if you are a member of the Pro Traders Workshop, then you should be receiving this email. I'm just going to go over the Monday retracement strategy because it's pretty much our bread and butter for trading. It's very predictable. Markets normally do not continue to go in the same direction from Monday through Friday. At one point it has to retrace before they resume its trend. So there are a few things that I do to qualify a trade, and I will go over that, and then I'll show you there were so many good trades today for Monday retracements. Now the Monday retracement usually starts around the Asian session, and so it's more like entering trade, enter and forget. So you have to really have patience because you're not going to make 50 or 100 pips in an hour or two. You have to wait till it develops, and this is what happened. Notice that during the Asian session coming into the UK session on pound Australian dollar, the market was pretty much flat. So if you took a Monday retracement trade, then you may think, well, you don't think it's going to work out, or it's going to work out. It's just that there's volume during the European and New York session, and this trade did not start to retrace until the New York session, or at least through the beginning of the European session. So again, here's pound Australian dollar. What you need to do is look at least 5 days of activity, and notice that the market was continuing to sell off all week, okay, setting up for a Monday retracement. And from the swing low to the swing high was approximately 95 pips. Okay. Now the exit is either at the close of the European session, which is around now, 11 o'clock Eastern, or look for previous resistance levels from, and here we had a resistance level which used to be a support, and that would be a great exit strategy right there. So I'm just going to go over a few other pairs and go over specific things you need to look for Monday retracement, because you need to qualify it. Okay, so with this one, the market sold off. Notice the Cass6 is oversold. I use a 14, 5, and 3 indicator, and that was Friday. And then Friday, New York session has started to retrace and continued through today. Okay, let's look at USD Swiss. The same thing on USD Swiss. The market rallied on Thursday and Friday, and notice the candlestick patterns on Friday, just an early indication that market was most likely going to turn around on Monday. And we had this huge wick on Friday, followed by a bearish engulfing candle. Market did not continue to rally, and it followed through on Monday, and Monday sold off. Stochastics was overbought, and that's all you need to know really. A candlestick pattern at a previous, notice at a previous resistance level on this trade, on this particular currency, and then the market just sold off today. I also count the number of pips, 67 pips on the USD Swiss, and this would be an exit because it is 11 o'clock Eastern and the European session is a close. It may probably and will continue to sell off, and that's fine. We're not concerned about capturing the whole trade. We're just capturing that portion. We know the next support level is here. We do not know if this is going to break through and continue, but we do know that it is support, and that's our target, and that's all we're concerned about. Okay. Euro New Zealand, here's another one. Okay, we had divergence on Euro New Zealand, which I love seeing on a 1 hour chart because that will guarantee a Monday retracement. Whenever you see divergence setups on a Friday going into Monday, then you know, okay, we're going to have a nice run. And it did. It rallied today and gave us approximately 123 pips. Pound New Zealand, the same thing. Here's Friday sell-off. Again, look at 5 days of activity. The market essentially was in a downtrend. And here's Friday. We had an inside bar at the beginning of the New York session, and it did rally, retraced to the support, and look, it put in over 152 pips today. Okay, pound yen was the other one, is here's the sell-off from the previous week, an inside bar, which is a reversal candlestick pattern. Excuse me here, right there. And then, as markets normally do, they retest the support levels. When they hit a support, they rally, they come back and retest that support, rejected that area of support level, and there's your Monday retracement over 90 pips. Okay. And the last one was the USD, EURUSD. Okay. And it's a great way to start the week. Being able to take Monday retracements gives you a lot of confidence to get going into a new trading week. And again, here's the sell-off on euro dollar. Thursday and Friday sold off. Here's the Asian session, 8 o'clock Eastern. Stochastics is oversold. This is how you qualify a trade. Make sure you have 3 or 4 reasons. This is very specific. You need to know. Stochastics is oversold. Thursday and Friday, the market sold off. And here's Monday's retracement. I always highlight Friday and Thursday because it gives me better perspective. I know the market sold off last week, and Monday it usually turns around and goes in the opposite direction of Friday. But stochastics needs to be oversold before you take a trade. If it's overbought, then you don't have a trade. Okay, so you have 3 or 4 reasons to take a trade. Number 1, Thursday and Friday sell-off. Number 2, stochastics is oversold. Number 3, we need a candlestick pattern. So on here we had indecision candles during the Asian session, 1 indecision, 2 indecision, and then this candle closed above the indecision candle, and that was our buy alert. And there's your market. So far it's put in 88 pips on euro dollar. So that's it for the Monday retracement tutorials. I'll be sending more in the coming weeks. Have a good trading day or week.